Hello friends, welcome to our channel Easy Shorts of Learning. Today's video is about process costing. Process costing applies to those goods or products where production or manufacturing takes place in different stages or processes. Suppose in a factory where mustard seeds are converted into mustard oil, there are three processes involved. Number one is crushing, number two refining, and number three is finishing. So in process costing, production moves from one process to another until completion. It means the first process is crushing process, where the output of crushing process becomes the input of refining process, and the output of refining process becomes the input of finishing process, and the output of finishing process becomes the final good, and that should be sold in the market. So in process costing, production moves from one process to next process. So friends, if you have not yet subscribed my channel, please subscribe my channel, and if you have any query related to this topic, please write me in the comment box. First, we discuss about the features of process costing. The first feature is plant or factory is divided into different stages or processes. In process costing, our factory or plant is divided into different stages or processes. Here, the making of mustard oil is divided into three stages. Number one stage is crushing, number two stage is refining, and third stage is finishing. Second feature of process costing is production in different stages. It means in crushing stage, production takes place where mustard seeds are converted and processed to so that the output is mustard oil, that is unrefined. The second process is refining of unrefined oil, and third process is finishing. It means in this process the refined oil is packed in bottles that should be sold out in the market. The next feature of process costing is output of each process becomes the input of next process. It means the output of crushing process, that is the unrefined oil, becomes the input of refining process, and the output of refining process, that is the refined oil, becomes the input of finishing process. The next feature is output of last process becomes the finished goods. Here the last process is finishing process, and the output of finishing process becomes the finished stock, and this stock is to be sold in the market. So these are the features of process costing. Now we discuss the important terms used in the preparation of process accounts. The first term is direct material. Direct material involves primary material or input or the secondary material. First, we discuss about the primary material. Primary material is introduced in the process first and should be transferred to next process until completion. Without primary material, production is impossible. Let's take an example. When we manufacture sugar, the primary material is sugarcane, and in case of mustard oil, the primary material of mustard oil is mustard seeds, without which the production of sugar and mustard oil is impossible. The second material is secondary material, which is added in each process or the subsequent processes. Here the secondary material is chemicals that is added in each process so that our output is sugar and mustard oil. The second term is normal loss. Normal loss means loss tolerable in the production process. Here the factory or the company assumes that this much of loss should be there in the production process. Suppose our input is 10,000 units and the normal loss that we have assumed is 10%. So our normal loss is 1000 units. This is also known as scrap or wastage. Sometimes this wastage we can sold out in the market. For example, when we are talking about sugar cane, or mustard oil, the wastage is used for the cow or animals feeding. So when we sold out this wastage in the market, the amount that we get is known as net realizable value. It is the value that we get from the sale of normal loss or scrap. Suppose this 1000 units are sold in the market at the rate of rupees 2. So our net realizable value is 2000 rupees. Next term is normal output. Normal output is the output obtained under normal circumstances. When we deduct normal loss from input, suppose our input is 10,000 units and the normal loss is 1000 units. So our normal output is 9000 units. This normal output can be equal to actual output, or it can be less than or more than the actual output. If it is equals to normal output, then our actual output is 1000 units, but sometimes this normal output is less than or more than the actual output. Suppose here the actual output is can be 8600 units, or it can be 9200 units. In these two cases, the another loss or gain arises, which is known as abnormal loss or abnormal gain. So the next term is abnormal loss. What is abnormal loss? Abnormal loss, when the actual output is less than the normal output, the abnormal loss arises. That is the loss more than the normal loss. Suppose here the normal output is 9000 units and the actual output is less than 9000 units. Here the actual output is 8800 units. In this case, our abnormal loss is 200 units. But if the actual output is more than the normal output, then abnormal gain arises. For example, here the normal output is 9000 units and our actual output is more than normal output, that is 9200 units. Then in that case, our abnormal gain arises, which is 200 units. Abnormal loss is credited in the process account and abnormal gain is debited in the process account. Our next term is how we calculate total cost in the process costing. The total cost is the debit side total of process account. Here the debit side is comprises of number 1 primary input, that is 10,000 units costing 1 lakh. Material purchased, that is the secondary material costing rupees 30,000. Wages paid to the employees in this process is 20,000 rupees and expenses incurred by the employees here is 15,000. So the total cost of this process is 1,65,000, which is the total of debit side of process A account. When we are talking about normal loss and abnormal loss, these are credited in the process account. Here the normal loss is 500, which is sold in the market, and the amount get is 3500, and the abnormal loss is 500 units. Here the value of abnormal loss is 8500, which how we calculate this value, we will discuss this value in our next video. And the output of process A is transferred to process B account, and in process B this is debited, and which is the input of the next process. So in this video we discuss about what is the process costing, what are the features of process costing, and what are the important terms involved in the preparation of process accounts. So friends, if you like this video, please share this video and subscribe this channel. Thank you so much. Have a nice day.